Hello, and welcome to episode number 134 for the National Land Podcast, where we discuss all things land. Our goal here is to inform, educate, and entertain those of you who own land or are interested in the buying and selling of land throughout the United States. My name is Mac Christian, and I'm the Chief Marketing Officer for National Land Realty. I'll be your host for today. Now, if you want to buy land today and you don't have cash on hand, the process can be challenging and complex. Land financing can be difficult if you aren't aware of all the resources available to you, hence the conversation today. Today, we're talking with Matthew Manuel, Robbie Francis, and Tim Jett of the agricultural lending institution Conterra. Our discussion today covers land loans, alternative financing, equipment loans, interest rates, and the current conditions of the land market. Today is a day of education for people who are looking to buy land and to know all the tools that are available to them. Now sit back and enjoy. We are live now. And so everybody, we are here with Conterra, and Conterra is an agricultural land financing outfit out of Des Moines, Iowa. And I have here Matthew Manuel, Robbie Francis, and Tim Jett from Conterra to talk to us today about sort of what they do and what they're seeing in the marketplace in general. So I'm going to kick off and just throw a brief intro for each one of you. Tell me sort of like how you got to Conterra and sort of what you do. Matthew, I'm going to start with you because you're on my top left.
Great. Thanks, Mac. My name's Matt Manuel. So I grew up in Northeast Louisiana. Family heavily involved in the ag industry, primarily trying to buy and sell real estate, mostly row crop land. But so had that background, went to LSU and worked for Farm Credit for about 6 years after I graduated college, and been on the private end of it for almost 7.5 years now. I've been with Conterra for about 4. And it's been great. I mean, I've got a passion for recreational land, ag land, both personally and professionally. But I think it's a great fit for my passions in life, and it's been a really good company to work for, and we're doing some really cool stuff. So excited to kind of get into conversation today.
Yeah, and you're sitting at a ranch right now?
Yeah, so I'm actually was planning on being in the office today, but was called down to a ranch down south of Coleman, Texas, and we're gonna do a little hunting this afternoon and tomorrow morning, and I just figured I wouldn't pass it up, and anyway, that's part of it in our world.
So, it sounds terrible. I'm not jealous at all. I'm not jealous at all that you're out hunting and I'm in my office. Yeah. All right, Robbie, you want to give us a brief intro here?
Yeah, absolutely. Robbie Francis, born and raised in Central Florida. Grew up around agriculture and whatnot. Family had some timberland growing up, and played baseball through college, graduated from Belmont Abbey in North Carolina, and found an opportunity to work for a private ag lender right when I graduated, based out of Florida, and was with them for about 4 years. And actually how I met Matt Manuel as well. We worked together there for a few years, and about 3+ years ago, I joined Conterra. Just a great opportunity to kind of cover the Southeast. I cover the Southeast and whatnot for Conterra right now. So it was a great opportunity to join up. And unfortunately, I'm not at a ranch. I'm sitting in my home office right now. So glad to be here with you, Mac. Thank you.
Awesome. Thank you, Robbie. And Tim, want to throw us a brief intro here?
Yeah, man. So I am originally from Texas, grew up in the DFW Metroplex area, went to college in Mississippi and never left. When I got out of college, I was working in wildlife and land management, and transitioned that into more of production agriculture and agricultural retail. Did that for almost 10 years. And Matt and I have known each other for a while, and same deal. We just through our relationship and some opportunity, I transitioned over to Conterra a little over 2 years ago, and it's been a good fit. I cover essentially what we call the Delta region. So basically anything that touches the Mississippi River south of Kentucky, Missouri. That's me in a nutshell.
Gotcha. You've been in Mississippi for a while. You've remained accent free.
Yeah. I try to keep a low profile. I don't want them to think I'm faking.
It's understandable. It's understandable.
Mhm.
So I'm going to hit you all with the first question, and I want you to kind of briefly describe sort of mission statement. What Conterra is, how it functions in the marketplace, and I'm going to throw up to any of y'all that want to jump in.
Yeah, I mean, I'll pick that up. I mean, the cool thing about Conterra is, and I'll just kind of bridge into this, but you've got, first off, we run very lean, right? So there's 6 or 7 of us scattered around the country, like ourselves, pushing out capital and finance and farm ranches. I mean, any industry you can imagine in the ag world, we probably are playing in it. But the cool thing about us is that you've got guys from, all the players in the ag lending world. So, farm credit backgrounds, Met, Pru, Rabo. So you kind of bring together all these different thought processes, I think, and everybody just tries to find the things that work, based off their, professional history. And we try to apply it to this. And I think when we were founded, I mean, the whole goal was to come into this space with the term that's been used a lot, and I love it, is a common sense approach to ag lending. You got a lot of players out there that are up and down on how they're feeling on pushing out money, for land loans across the country. And so what I find is that we're consistently, trying to grow, trying to be flexible. And I love that word common sense, because sometimes in this space, there's down years and up years, and you can definitely run into periods of time, kind of like in the market we're in now, where common sense may not be used. And so I think that sets us apart from a lot of the other lenders in the space, and just our variety of capital that we have at our fingertips is huge in this market, just to give us the flexibility to, whether it's the structure end of it, or, whether it's rate, it just gives us a lot of flexibility in the market space. And I think, especially right now, I think it's huge for our growth opportunities. And we've been reaping those rewards for sure.
And tell me a little bit about sort of the stipulations that you have for lending. Is it strictly agriculture? Does it have to be crop production? Is it, do you stipulate between crop, ranch, and is hunting land part of it, rec land? How's that sort of work as far as what you work with?
And I think Robbie and Tim can speak to this as well. I think that we all, our market's all very different, right? Both from the competitive standpoint of who we're up against, but also just the geography, obviously, and the different, commodities or types of properties you're seeing in different markets. I would say that we are very open to any of the space. So we do a lot of recreational. Personally, I grew up a lot in the row crop world, so I do a lot of row crop. In the Panhandle, we got guys that do a lot of cattle deals. We do a lot of dairies, permanent plantings, and obviously each market's very specific to what we're seeing. But we cover huge territories, and we all chase our relationships wherever they are. Right,
and we could probably kind of expound on that. So Robbie's in Florida. I'm in essentially the Memphis area. Matt's in Texas. We have Jim Davis is in Boise, Idaho. Tharvin Gill's in California. Trish is in Arizona. We have Joe and Peter in Iowa. So we land in the lower 48. And what Robbie's seeing on a daily basis, from citrus to vegetable production to what I'm seeing in more of your traditional, Delta row crop, corn, cotton, beans, rice, some cattle, and then Matt, and you get out west, big dairies, permanent plantings, and a lot of different recreational stuff, kind of sprinkled in between across there. Oh yeah, and then we have Luke Schultz is out of Manhattan, Kansas, also.
Yeah. Yeah. And like Robbie, and to speak to that, Tim, like Texas, obviously a huge state. And we all kind of jump around wherever we may have relationships, which is fun because you get to see totally different markets, get to see properties maybe you wouldn't have the benefit of seeing if you weren't in this job. But like Robbie's got a lot of relationships in South Texas, and I mean, it's a big state, right? So, and Robbie and I talk all the time, and Robbie's been helping kind of grow that South Texas market. He's been hunting down in South Texas for years, built some great relationships, and it's a market that we want to grow in, and that's what's fun is like we are all super looped in with what's going on both internally and externally, and we're all just buddies too, which makes it a lot of fun, right?
Mm-hmm.
We go on hunts together. Go on fishing trips together. We just enjoy being around each other. So it makes the culture here really fun and enjoyable. And never stressful, Mac. So
never stressful. Man, y'all need to go work in marketing for a while.
Yeah, they really undersold that to me when I came over.
Yeah, I would say there's like no commodity that we've turned down. We've looked at everything from, like they said, pistachios out west to blueberries and citrus in Florida. I mean, we've looked at anything under the sun, and I feel like with us being what I would say like a full spectrum lender, we really can get creative and have a product that really fits any type of operation out there.
Yeah.
And tell me a little bit about sort of the marketplace fit for your company. You've got, a lot of landowners out there are probably familiar with like FSA loans and stuff like that. And then there's private lenders of any varying degree. And, there's companies that people can talk to. And a lot of people probably don't even know where to get a hold of companies like yours. Just tell me a little bit about the fit in the marketplace that Conterra has.
Yeah, I think we would probably all have different answers slightly to this just because of how we approach the market. But, for me, like coming from the farm credit world, which was wonderful, learned a ton, still have a lot of friends there. Working with Robbie in Florida, you see different aspects of the space, but I would say, primarily where we fit is that we are something different. So it's when you leave the farm credit world and go to the private side, it's honestly, it was a little scary for me, just because, these farm credits are pillars of their communities. I mean, someone's thinking about buying land. Oh, I'm going to call farm credit. And it's not like that, right, on this end of the space. So it's all about building relationships, which is what we all love doing.
Mm-hmm.
And just meeting new people, learn about different operations. And so it's a different approach as to how you get into maybe find your deals early on, especially, and when you're trying to, build your book of business. But we just have extremely competitive rates. And that will vary how much we may be way cheaper. Like in my market right now, we're very, very competitive, especially on the interest rate side. We're continuing to build out better products. But in other parts of the country, it may be a tighter deal, depending on whether it's the farm credit or, and even like your larger life insurance companies, like their cost of money is different in different parts of the country. I mean, I think it just depends on the area that you're in. But the good thing is, like, we all talk and we know what's going on out west. I know what's going on out east. And so we all kind of bounce off of each other, try to be, make sure that we're coming into the deal the right way.
And Mac, I do think, to follow up on Matt's point, I think there's a really good fit for us, say, for instance, kind of in the lane of what y'all are marketing for a majority of your rec properties, and then some of your, true row crop farming stuff, where we're going to make a very fast decision. We're going to be competitive, and we're looking to grow essentially across the country, and especially towards Matt and Robbie and I's direction.
Yeah. And Robbie could even speak, like, Robbie, you should kind of speak on, like some of our scorecard type programs. And I think this kind of ties into the common sense approach, right? Like, I think some of the products that we're offering right now are hard to find with other lenders out there. And so, yeah, I mean, Robbie, I think it'd be good to kind of talk through that You kind of ran that program at our last
Yeah. I think like one of our great products we consider it a scorecard program. It's a quick approval, low documentation requirement, typically a few years of tax returns, balance sheet application. We can get you a decision within 24 hours for the most part. As far as our products go, most of our stuff's going to be tied to farm and ranch real estate. We do offer some operating capital as well. Most of that's for, current clients and whatnot, but we do have the ability to do that. On the scorecard, it's very limited underwriting, and those products go up to 30 years as far as variable fixed products, but it really takes the stress off of the client as far as having to deal with a lengthy approval process, getting in years and years of tax returns and balance sheets and information. It really kind of consolidates everything. It's really kind of based on credit history for the most part. So it's a very quick process that, we have an internal product. We have some outside products that we use for that scorecard program. So between the various ones that we have, it just makes it a lot easier for our clients to, focus on their operation, focus on their day-to-day job, but let us, handle the lending side and get you a quick decision, quick approval, and kind of move forward on it and take, like I said, all the stress really off of them. So.
Yeah. And Robbie, to speak to that, I mean, Max, so really like deals under $5 million. So, I mean, we have the ability to do, I closed $120,000 loan last year, and, we closed deals pushing 100 million last year, and there's guys that close well over that. So we have this huge bandwidth, but those deals under 5 million, we have multiple products that are, 24-hour approvals. And some of them really like under $1.5 million, we literally just need an application.
Yeah.
It's more of like a
credit base.
A model that we've built out. And so it's worked really well for us. I think it's helping in our growth and, so just kind of, I guess, speak to our funding side of things. Like we have capital through some GSEs. We are a central servicer, so we service those loans. So it's not like we're closing a loan with a client. I think it's key in this space. We maintain that relationship with them throughout the life of the loan. But we have flexible capital, no prepayment penalties, a lot of flexibility there. But then we also have, we're investment managers for life cos. They commit capital to us, which I personally don't know any other lenders in the space that are getting direct capital from life insurance companies. So it's these life cos that want to be in the space, like some of the bigger players, but they don't have an ag team and they don't want to go build that out, and they just entrust us to manage that money for them, and we push it out as long-term debt. And we've even built out scorecard programs with them. And those, normally we don't even require formal appraisals through the life codes under 5 million if we can get them pushed through on the scorecard program. So we're just trying to look for efficiencies that are missing in the space, and I think that's the biggest thing that we do is we all put our heads together and find those inefficiencies and then try to capitalize off of that and serve our clients the best way we can.
Yeah, it's good to have that flexibility to obtain capital. Let's tell me a little bit about sort of marketplace wise, all through last year, besides, we had new administration coming in, we knew elections were coming up, that affected the marketplace as a whole. But the big one all through last year was interest rates. Tell me a little bit about sort of what you saw in the marketplace and how it affected the marketplace and sort of what you see for the upcoming year.
Yeah. I can speak a little bit to that, and I'd love some of y'all's input as well on this, but, looking back, and I was kind of laughing about this the other night, talking to my wife, I was just like, I realize now that I was pretty spoiled to graduate LSU in 2013 and have that market to kind of grow my knowledge in this space. It was, in general, very good rate market, a very hot buying and selling market. Just all across the board. And I feel fortunate that that's kind of when I entered the space, and Tim can kind of speak from the other side of that. But it's a very different market right now. It's the really good deals are very competitive, which I think is great for the clients looking for the capital. And I think that, what you've seen these rates do, it took some time for people to swallow, going from, we were offering, 3.25% money, and all of a sudden it's jumped to, it got well into the sevens at one point. We've seen these treasuries kind of ease back a little bit, which has been helpful for us. So 10-year treasury is a big way to track kind of what rates are doing in the ag space. And, where we've really benefited as of late is that, this yield curve is trying to correct itself. So the shorter term, like the 3-year rates, now they're fully term products, 30-year term, 30-year AM, or however you want to work that out. Those rates have really kind of eased back, and it's given us a competitive edge over a lot of our competitors, especially in my market. And that varies.
Yeah. Oh, yeah.
Because like where Tim's at, that's the cheapest capital in the country going out.
Well, you have a lot of pushback. Guys are unwilling to say, put a 10-year term on 6.5%. They'd rather bank on, hey, I'm going to lock in this 3-year rate and it's going to refix in 3 years and it's going to be, more appetizing or better. It just our farmer customers are in just a challenging environment. On-farm income is non-existent. Trying to grow businesses, requires land in some cases, whether it's renting it or buying it. And I think it's just hard for them to see a path forward currently, especially with the rate environment the last 18 months and then the difficulties in just marketing crop. But Matt said it. If it's a good deal, it's been highly competitive and everybody's trying to get a piece. And on the the recreational side, that's probably been more steady, at least where I am. People are looking for good rec land. A lot of guys are not wanting to use all cash, so they're trying to leverage debt. So there's, to that point, those shorter term fixed products have been really well received.
Yeah, and I think too, 4 years ago, if someone had a lot of equity, let's say they own 5,000 acres of irrigated row crop land, and they've got a good rate, but the rates were good, right? So it was easy to come in, refinance that out, utilize equity. Right now, you got a new client that comes in. Now, the great thing is that we have the ability to work with a lot of existing clients that we've built over the last few years, but it's tough when you got a guy come in and he's like, I'm at a 30% loan to value, but I'm paying a 4% or a 3.5% or whatever it may be rate, but I need to use equity out of this. And, whether, hey, this bank's kind of backing off of ag right now, they're scared, or two, it's too big of a deal for them, whatever it may be. That's where getting creative right now matters. And I think it's what's setting us apart. Robbie brings in a deal, he calls me, or if I get a deal, I call Robbie or Tim or however it works. We talk through these deals to try to make sure we're looking at, what's the most creative way we can get this. Maybe it's not take down everything. We don't take over the world today. I would love for that guy to keep that cheap money, and then let's just figure out how we get this done without moving that. And so and we work with banks on that too. So that's the good thing. We approach, I would say, our competitors a lot differently than maybe some other people would, in the fact that we work with them the best we can. We don't necessarily want them to lose their entire relationship. It's good for people to have multiple relationships, but we just try to work with other people in the space to make sure that we're giving the client the best deal. And if it's not us, then that's okay. And we'll get another shot at it. But I think approaching it that way lends well to maintain relationships for the long term, which obviously in this game, that's the key thing, is not burning bridges and just figuring out what actually makes the most sense for the potential.
Yeah. Sometimes serving our customer is sending them somewhere else, or
absolutely.
getting out of the way.
Tim, you brought up a point. You just mentioned that there's a good amount of people out there that are sort of holding tight, expecting interest rates to drop at a later date, or like holding off on refining or new loans. Is that a common thing that you're seeing throughout the marketplace? And sort of what is the anticipation that you have with interest rates? Is that something that you're banking on as well?
I'm banking on nothing. I just look. I think Matt.
I'll be honest. It was
a
trick question because the answer is like I don't know.
There are a lot of loans that were on a 3 or 5 year term that are going to balloon or need to be refied, and I've looked at a couple of them, and they just the sense of urgency was there, but there just wasn't that big of a difference in where they were, or where the loan currently was, and kind of where the market's been. There's been a lot of volatility in the rate. We had some in the late fall that I closed in the mid fives, and then a month later quoting essentially the same deal in the sevens. That's come way back down now. But back to your question, I think there's a lot of that's just inevitable. I think there's going to be a challenge. People are going to kind of run up against the clock. But yeah, as far as the crystal ball, if I had that, I wouldn't be sitting here with you fellas.
Well, and like I can tell you, like I'm guilty of selling 3-5 year money, 4 or 5 years ago, and probably looking back, people wanted a 3.5% rate instead of a 4.1% rate when they could have locked it in for 20 years.
Yeah.
So it's like, maybe, and that's probably a learning moment for me, both from how I have those discussions when they're pushing, I'd rather 3.5, 4.1. Well, I don't think anybody necessarily expected the rates to do quite what they did. And I don't know that they'll get that cheap again for a long time, if ever. I don't know, right? None of us know. We're just having to deal with what we're faced with on a day-to-day basis. It's definitely much more, like Tim used the word volatile. It's been a lot more volatile than anything I've experienced in my career. But I do think that we're seeing some consistencies from an outlook perspective, mainly in the shorter term space. Like if I'm buying a farm right now, that's what I'm doing. It's 100% the best bang for your buck. Go with that 3-year rate. You can do rate conversions. There's a lot of flexibility there. Term it out however you want. But I just think it's finding those pockets where maybe we can see some consistency on the outlook perspective. The discussions internally with us, and even, you listen to some ag economists, but I think these long-term rates are not going to get where people want them to be, like in the very near future. I do think you'll see them continue to improve slightly over time, but I think the market's going to be very hesitant to push that down.
I think if you're holding out for a 4% or sub 4% rate, like that's,
yeah,
I just think that was a unique time in our recent history. I think, a little over, between 4 and 5.5, like that would be a great place to land and do business and, have a kind of a jumping off point from the last 2 years.
Yeah.
Yeah, I definitely think clients kind of sense, some normalcy with the rates, and there is that comfortability, I would say, with the market where it's at right now. And kind of like Matt hit on, I think that's what sets, Conterra apart with, our flexibility and our rate conversions. We can put you in a 3-year product, 5-year product, and at any time we can do a rate conversion or refinance because we don't have those prepayment penalties on the majority of our products. So I think that, for our clients' sake, there is that sense of normalcy where, yeah, rates might come down a little bit, but this is kind of the new normal for the time being.
Yeah. Mm-hmm. Yeah. And Mac, I think it's fair to note, like, especially in the production world, the insurance capital, that's what everybody wanted. 5 years ago, 4 years ago. It's the cheapest long-term capital out there, and it still is. It's just not as pretty as it was. And a lot of, so what's nice though is like right now, since we have multiple sources, maybe we park you in a 3-year rate, with more traditional capital, and we bought our time, and these insurance rates come down, and that gives us an opportunity to move you into that product on like lock it in. And it's not as flexible. Usually it's going to carry some sort of prepayment penalty for the initial, 3 to 5 years, but it just gives us a lot of internal movement ability with our clients. And it's even speaking to like Tim was saying, it's tough out there, especially like in the row crop world. These commodities are not, not where people want them. Inputs are still high. And I think that, there's a lot of lenders pulling back right now. We're seeing that all across the country with a lot of different lenders, both your community local banks that are heavy in agriculture, but even your larger life insurance companies. And I think it's just the ability to, hey, right now, this is what makes sense, but maybe I think there'll be opportunity down the road to kind of get this locked in or change your structure or change your capital source or whatever it may be. It just gives us a lot of flexibility in that. And it makes it more enjoyable. This is a tougher market. We've said that over and over again on this call. We're not trying to scare people, but it's just, you have to understand that the lenders out there are seeing some pretty ugly stuff right now. And so, approach may be slightly different, but the good thing is that we have knowledge across the country because of the backgrounds that we have within Conterra. And so it gives us, I would say, more comfortability as to how we approach, those deals, because we've got someone that's an expert in some given area or some given commodity. If I don't know it, someone else does, and we'll work as a team to make sure we're figuring that out the right path, at least.
So one comment that you made just a little bit ago is you were all talking about people that have financed in, I'm going to say, recent history and are sitting on, 3 to 5 year fixed loans on the property. And, the wait and see approach has obvious risk, right? You get to the deadline and you got to scramble to find your next loan or to refinance. And let me throw a disclaimer on this to anybody listening, right? Because since we're talking finance and since we're talking lending, what we discuss in here doesn't apply to you, right? You need to talk to your lender and find out what applies to you specifically. These are generalities, and just because we mention it in here does not mean that that's going to be what works for you. So I meant to do that up front, but I want to throw the whole SEC kind of disclaimer on there and be like, all right, we're not advising you specifically. And that's a pretty common thing. If you've ever listened to anything finance wise, they always have that kind of disclaimer. I want to make sure we cover that. But you mentioned that there's loans coming due and rates have gone up, and there's people in that position where they're going to be forced to refi at a higher rate than where they were. What is your best advice to people they're not in the scramble? Should they be shopping now? Should they wait until deadline? What's sort of the approach there? Because I've always gone by the school of the one sure way to lose money is to try to time the market. Mm-hmm. So, what's sort of your best advice in there?
Go ahead, Robbie.
No, I was gonna say call Conterra.
Yeah.
I think
there it is, Robbie.
I think it's always good to know your options. The more time, the better for us. The more time we have to really dig in and to get creative, the better. When we get pushed to, the back burner and somebody's just kind of putting us on the end and isn't really getting us the information quickly, and then all of a sudden they want us to close the loan and lock that rate in, it gets pretty stressful and difficult for us to do. Some of our loans, we do have third parties involved and whatnot. So obviously the best thing in my opinion is to know your options, call multiple different lenders out there, see where they're at, see where their rate's at. For us, we don't charge to take a look at your financials. We don't charge like an underwriting fee like some lenders do or anything like that. We'll take a look at it for free and we'll give you a quick answer, yes or no, if we can do it. But I think know your options and get ahead of the ball for sure, because you never know. Rates might jump up, 50 bips a percent here in the next 6 months. But as of right now, I think if we can get you in the door quicker, then we can get a decision for you, sooner than later, and have more options for you, and then go out and see what the market has.
Yeah. And I also, and to speak to that, Robbie, like, I also think Tim and Robbie and I and the other people, the other RMs that work with us, like, we don't have a tough time like building relationships with people. That's what we enjoy doing. But I think it's good to kind of build that relationship, get a full understanding when it's not like I need this yesterday kind of thing. And I think it gives us a little more thought, or gives me more thought process, at least, as to how can I best serve this client.
Right.
And I've really gotten to understand who they are as a person, what their plan is for the future. Do they have a family? Do they have kids? Like, what's their outlook on life in general? And I know that's like a big way to look at it, but like, we get to know our borrowers like that. And sometimes it makes it harder when you become friends with your borrowers, because, you're going to be held to that level of service, but it keeps us on our toes. And I would say, like, when you're 6 to 8 months out from a rate coming due, I think that is a good time, in my opinion, to start seeing what's out there, talking to your current bank. What is it looking like?
Yeah.
Get a feel from them, but, shop it. And look, I mean, we all don't like losing, right? We want to win every deal that we go after. That's just not the case in this business. It's not going to happen for a multitude of reasons. But, the way, I mean, that's going to be part of it. So we approach it like, hey, no hard feelings. If you want to stay with your bank because you're comfortable with your bank, but here's what I would ask them to do for you.
Yeah.
And so, like, we just want to be a resource, because being a resource allows you to build like a trust. And I think that's key, especially in a market like this, is to have trust that your lender legitimately cares what happens to you. Can you meet your goals? And whether that's us doing the deal or not, that's part of it. But, a lot of times that definitely leads to us getting the deal, but sometimes it doesn't, and that's fine. We get that. I mean, there's some people that have been with a bank for 4 generations or whatever, especially in the Delta.
Mac, one thing I'll just speak specifically to, I think it's kind of an overgeneralization, but if you're sitting at a 4% rate and you're worried about it changing, you really need, the borrower needs to have a really good grasp on his ability to service debt beyond, if everything's great at 4%, well, at what point is it not great? And, if the break even, whether it's purely in a farming enterprise or you're a W-2 earner, especially coming to us, it's really helpful. And it shows us, like, hey, this guy or gal, they're ready to go. They understand what they're doing. Like, and, if we're 6-8 months out and we can really try to be looking forward for that, even just that, we're going to try to set that bar and get there. It helps us be much more effective, Now, granted, like, we're going to get into the financials and we're going to figure out the ability to service debt. But that's a big thing. I think a lot of people just panic, like, oh my gosh, I got to go to 6%. It's like, well, maybe you can manage 6%, or at least manage it for 18 months, and then we can get you into that lower rate.
Yeah, when they start looking at the market, 6% is a pretty good rate.
Yeah,
right now. I mean, we've got money in the 5s right now, but I'm not seeing that in the space a lot. But it's still people that haven't been buying and selling and really know that market. There's still people with like shock factor. After a conversation, I'm like, look, this is a very good rate in this market. Like, there's lenders out there charging 8% to really good borrowers right now. So I think it's all relative to region and each person in general. So
I was going to say, I can't believe I'm going to do this, but I'm going to quote our CEO and inflate his ego a little bit. But he's always saying this quote to everybody that the best time to make a decision is when you don't have to, because when you're up against the wall, you make bad decisions.
Yeah.
And, so Ronnie, you can't use that against me. I quoted you.
Shout out Ronnie Richardson. What a great gal.
I wanted to ask too. So one point that you just brought up was about different money suppliers in the marketplace pulling back a little bit. Is some of that driven by, I would call it legislative risk right now with we have a lot of land that is sold in the last 3-4 years that is breaking record prices. So you're taking high value land, and now there's tariff risk where some commodities are not moving as much because of trade wars. Is that sort of driving the market a little bit on the loan side? Is that condensing money or making money harder to find?
I mean, Tim, you can probably speak to this somewhat, but I mean, I don't feel that. I think it's more, where I'm really seeing it is in Tim's market, because a lot of those community banks there, and then even you get into, more rural parts of Texas, right? So I'm north of Dallas, but like you get out in the Panhandle, a lot of these banks, all they're looking at is in those regions, especially the Delta, are a lot of row crop focused borrowers. And like, it's not pretty right now, right? Like these guys have shown a very long history of success, but all of a sudden, it's not just one of their borrowers, all their borrowers, their cash flow does not look that great, most of them. And so based off of last year and even the outlook, when you start putting projections together for this year, it's tough. And so I think that just like, especially these smaller banks, these community banks, I mean, they, based off their total loan portfolio that they have on the books, a big portion of that's tied to the ag space. Those are the ones, in my opinion, really tightening up. But it's also just an outlook. I mean, water's an issue for some of these lenders in certain pockets of the country. We've seen there's a lot of stuff going on in California right now. There's a lot of large lenders that have a lot of troubled debt coming on out there right now. And I think that a lot of it is just driven from not understanding where we're headed. People are just scared because we have no idea where this thing's going. We can give you a thought, but I don't think anybody knows. And I think that's the scary part for people. And I think that's what's really tightening up everybody. And there's some larger banks that have not had a lot of bad debt on their books, and they're taking on some bad debt now. And they're probably taking a step back and being like, hold up now. We need to relook at how we've been doing this. And I think you see that on a large scale and a small scale. It's just everybody feels a little bit in the dark right now about where this is headed.
Yeah, you mentioned coming out of school in 2013. I came out in 2006 and got hit by the 2008 crisis right out of the gate. And I think a lot of lenders are jumpy because of that past situation. The history doesn't necessarily repeat itself all the time, but it's a good barometer.
And Mac, when you say that, it makes me think about this my first boss I had at Farm Credit in Louisiana. He was from a Vols parish. I still talk to him once a month. Awesome guy, Ted Goche. But he went through like the late 80s, the 80s, early 90s. I mean, it was ugly, right? And so it changed his whole perspective on life. And you get a lot of those guys that have been through those times, and they're terrified right now. Now, I think from our perspective, there's a lot more cash in the marketplace. And I think that changes things 100%. I mean, there's still a lot of cash out there, and there's people still making money. But yeah, I think it's just an outlook thing and understand your experiences in the space. So
yeah.
Awesome. Well, I'm just looked at the clock here. I know I told you all like 30 to 40 minutes, and we pretty much hammered out, I think, a majority of that so far. But I want to give you a chance here to sort of tell any listeners out there sort of how y'all work, how to get a hold of you. Make your pitch. No, I don't want to make it that blatant, but I mean, yeah, like let's tell them about Conterra Ag and how you're running the show and how people can get a hold of you and what you're willing to work with.
Yeah, and I think everybody's gonna have their own perspective on this based off of their work history and whatever it may be. But I know for me, growing up in the space I did and being involved in, I guess ag real estate in general, like that's my dad's one true passion. So like I got that from him. We still stress out my mom and my wife because we're just constantly looking at deals that we're probably never going to try to buy. But I think it's the fact that you get people from all parts of the country that work for this one group, right? And we all came from different backgrounds. And we all have a true passion for ag real estate. We all have a passion for hunting, fishing, the outdoors. Mac, I know when you and I first spoke, like, you said fly fishing, and like, I mean, I could sit here and talk all day to you about that, or bow hunting or whatever it may be. And Robbie and Tim are the same way. Duck hunting. I mean, that was like a key part of my life and still is. But I think it's just the fact that we bring different backgrounds, but we all have the same goal in mind. All of us have been heavily involved in the ag space, better or for worse. And that a lot of it is what put the food on our tables growing up. And we were fortunate to have parents that worked hard and I mean, they made a living off of the ag space. And so I think that the biggest thing is that we all have the same goal. We all want to get a deal done. We want to get it done the right way. We want to serve our clients. We want to get to know our clients. It's a personal experience. And then the fact is that we just have a lot more flexibility than a lot of the lenders. And I think that's always big, but it's huge right now in this market, for sure. And we just want to meet people, talk to people. And if we can help you, great. And if not, then let's just keep talking, and maybe one day there'll be an opportunity to work together. So that's my pitch.
Yeah, no, I think Conterra is truly a lender that's, going to be there through the good times and the bad times with you. I think just like Matt said, our flexibility and our ability to be customizable just really sets us apart with our various products. And, we really hit on culture as a company, and I don't think you're going to find a company with a better culture fit than Conterra when it comes to ag lending. And we're just thankful to be a part of a great team, and we'd love to, help anybody and take a look at anything for anybody. And I promise we'll be quick and get you a decision pretty quick.
Yeah. I'll echo everything those guys said. I would, as far as getting a hold of us, website, conterraag.com. Conterra is on, I think, every major social media platform. You can find us on LinkedIn. You can find our contact information on the website. We could probably follow up with something if it needs to be sent out or broadcast on this. But yeah, we want an opportunity. That's all. We appreciate you guys hosting us, and I think any way that we can help someone make a competitive purchase, on land, it's a win. It's a win for what y'all are doing. It's a win for us, a win for the customer.
And you all mentioned that your territories, are there any parts of the country that you do not service?
Alaska and Hawaii.
Yeah.
Alaska and Hawaii. Okay.
Which I don't think, we probably could look at some Hawaii stuff. It just depends.
Yeah, man.
Yeah, I saw in the Wall Street Journal, Trump called Canada the 51st state. You think they'll let us go up there if that happens?
Yeah, maybe.
Yeah, why not?
Is that too soon? Sorry.
That'll work out. I personally would be looking for business in Hawaii because you have to go vet that first and check out.
That's right.
Yeah,
we have to vet a lot of the stuff that we finance, man.
Yeah. You got to go put feet in the ground in Alaska too. There's
gotta have boots on the ground if we have a Hawaii deal for sure.
Yes.
Yeah.
Awesome. Well, hey, Robbie, Matt, Tim, thank you very, very much. Very much appreciate your time. I appreciate your knowledge.
Yeah. Thank you, Matt.
Yeah, man. Thanks a bunch.
Thank you, Mac. Y'all keep up the hard work. Y'all do a great job, man.
Absolutely.
Thank you, man.
Thank you.
This concludes episode number 134 for the National Land Realty Podcast, discussing land loans and current market conditions with Matthew Manuel, Robbie Francis, and Tim Jett of Conterra. You can learn more about land ownership and the buying and selling of land at nationalland.com. And remember, subscribe to this podcast so that you can be reminded of new and upcoming episodes. Thank you. Bye.